All right, traders, welcome to the end of day and end of week recap. This is Christian Fromhertz, Tropic Trade Group. And yeah, now that the dust has settled from this week, Fed meeting, all kinds of earnings reports, lots of events this week. 6 Fed speakers, a half a dozen. Someone said a 6-pack of Fed speakers today. I like that. I think there's actually a couple speaking this evening too. Around the clock, Fed speakers. Listen, I'm making a little bit of a joke here, as I do on Twitter a little bit, because you have to laugh a little bit. So I want to go through with you in this video. I'll make it short. I'll try to make it short. The good and the bad of what we're seeing right now in the market, and the index review as well. So let me kind of start with the price action for the day. We had a little bit of a comeback from the lows, but we did have another spill lower too. So that kind of price action of what we're seeing, where you look at some of these areas of the market, and basically in the bottom left down here, I can zoom in a little bit just so that you don't have to squint your eyes. By the way, risk disclaimer in front of you, everything that we're talking about is for information purposes only. But look at some of these things, right? So does this feel like a bottom to you? When you see biotech down 5% for the day, solar stocks down 4%, clean energy down, software down 3% for the day, retail, which has been getting absolutely smoked, down 2.5%. So does that feel like that's bottoming action to you? To me, it doesn't. Basically every day, what we're looking for is different clues, right? We talked about in yesterday's video how that there was like a major big, move down in breadth, which kind of accompanies other corrections. Once again, it doesn't mean that there's going to be a reversal right away, but it's kind of just a step in the process of a correction that you get this big negative breadth with volume, which is what we saw yesterday. So if you're not familiar with that, I sent out a note last night to members discussing that, detailed note to Tribeca Trade Group members talking about that, and talking about, I think, 4 other occasions that we saw as breadth as bad as it was throughout the last few years as it was yesterday. And yesterday's breadth, which is basically looking at down volume versus up volume, was the worst that it's been in about a year. So that's something, right? So that's something. It checks another box in terms of this correction that I think needed to happen. But I think the main thing here is just patience. The good and the bad. The bad is just these growth areas just are continuing to get annihilated, and they're good shorts. We saw not just retail, but anything to do with online retail just get pummeled. Etsy, Wayfair, right? Under Armour got hit today, which brought down anything in that space. Lulu got absolutely smacked. So these things, like they're still washing their way through. Interest rates are a really big factor right now. After the big move in TLT yesterday, down another 1.5% today. So these, I think the interest rates need to cool a little bit. I'm not going to predict when that's going to be, but these are big things. And I think the reason why I wanted to send this video out is just to kind of make sure that you're kind of reading all the various different signals in the market. I talk about this a lot, that sometimes traders are looking for, like, I see this on Twitter all the time. Oh, does that mean the low is in? Or does that mean, like, okay, does that mean we're going up now? You gotta, first of all, I think patience is really required here. And you're just not going to get the one thing that is going to tell you, like, oh, the low is in, right? It's going to be a combination of factors, right, that have to take place. And that's why I go over with you, because I think what you're going to see eventually, right, is that you're going to see stocks start to move up a little bit. Some stocks are going to start to act better than the overall market. Right now, we've got very thin breadth, right? I'm going to review the performers for the week. Actually, I can bring that up. Right. Excuse me. We can do that right now. But you could see that look at what performed well this week, right? It was value stocks again, right? And a lot of that has to do with the interest rates, right? I can't believe this, but XLE was up 10% in the whole group, the whole energy space. XOP, right? So it's not just oil, but it's nat gas names because nat gas has been flying. Interesting, the home builders were up. So that's different, right? That's a good thing. Banks were also up for the week. They were up 1.5%. Utilities got in there. The semis were up 1%. So there's some good things in here. But there's also, when you look at the right side of the the performers, there's a lot of things that are down a lot. This biotech continuing to move down like this, I really think that you're going to have to see maybe that group perform a little bit better. So again, it's a combination of things. Some of these bigger areas of the market, the consumer discretionary down 3%, right? That's also another issue. The internet stocks, which again, in my opinion, the internet stocks have, I don't want to say just recently, but they're no longer the leaders of the market. And I think that a lot of traders are still coming to grips with that, right? Everybody wants to return to what they're familiar with, a Facebook or an Amazon, but they don't have market leadership and they haven't for a while. So it's best to just watch, right? And if you're going to play some of those things, you do it lightly, in my opinion. Again, I'm not giving out any advice or recommendations, but the SPY was flat for the week. I'm going to go through the technicals. This is it. This is the level that I've been talking about. 80% rule is complete. You heard me say that earlier in the week. We did hold 40.71. I thought that was important, but overall, when you look at the shape of this chart, it's not in great shape. Yes, I would like to see this 40.70 level held. But, it doesn't have to. I mean, we can certainly see that break lower. The Qs, which I've talked about now for a while, right, and on the weekly chart, they're not done with that 80% rule. I think that they, until we get to the bottom of value, which is not that far away, 297, which is basically, another, if I could do this math right now, we'll round up 298 minus 309.25 divided by where this is now. So that's another 4% down, which is really not a big deal, considering how fast we've been moving, right? And then, and then we'll have a level to watch in here, right? So that's what's going on. Of course, this IWM is a different picture. That's below value versus the two other charts, right? So we're just looking at the weekly bars here now that this is complete. Does this hold in here? It's possible, right? But when you get off the weekly charts and you go onto the daily chart, all of these are below the 200-day moving average, right? So we're continuing to trend down. It's a bear market, and I think you just need more time, right? And I think we're possibly getting there in terms of boxes that need to be checked and so on and so forth. There was a bullish divergence today. A bullish divergence is when the S&P is down, which it was today, and the VIX is down, right? That is a bullish divergence. Usually when the market is down, right, the VIX is higher, right, because of volatility. So perhaps it's getting a little bit long in the tooth in terms of, the volatility. The VIX is still at a 30, but I'm content right now to kind of not stick my neck out because I'm not seeing enough of the positives right now. And, that's what I have written down here, which I think is very important. Joe Fahmy has been doing a great job talking about this, avoiding FOMO, preserving your confidence, preserving your mindset right now. These bear markets will wear on you, right? I could tell you, I moved to cash, a few weeks ago, but I've got about right around like 90% cash in my trading account, right? That first of all alleviates stress because I just don't have right now more more positions equal more problems, especially on the long side. I am carrying a couple shorts, which help, and helped me a little bit today too. We had a nice short today in MSTR that worked really well. Also Dash, which worked yesterday as a day trade, worked as well as an earnings trade. So, those shorts for now are kind of buffering and helping a little bit. But that's the main thing, is just, let this play out. I was mentioning this to members earlier that this is an extremely interesting market. Like if you were, one of these talking heads that goes on CNBC, or someone who works for a bank and is a strategist, right? It's one of the most interesting times right now for these people, and they don't have the stress of having positions on and being a trader and having to time these turns in the market and so forth. So if you can kind of act like they are right now and just say, wow, this is really amazing with what the US dollar is doing, what interest rates are doing, what energy stocks are doing right now. And, they are cheap. Right, you're seeing Buffett add to energy stocks. Right, he's a value guy. Right now, the energy stocks are acting like growth stocks. Right, they're flying some of these things. So, keep that in mind. Here's the performance for the week again, and I'll kind of just leave it there. As I said, I wanted to make it a shorter video. We'll talk more. We'll do more. Excuse me. We'll do more analysis for members this weekend. But it's these bear markets. They're part of the game, right? They're part of trading. It happens, and every time that we go through one of these, I will say this, which I know bears aren't going to want to hear me say this, but every bear market that we've ever had, what happens at the end of it? The market goes higher. So we just kind of have to wait, be patient for that process to continue and work its way through, and we'll go from there, guys. Have an awesome weekend. Also, treat yourself a little bit, right? Make sure you do something to relax that's nice, that's away from the screens and so forth. It is kind of, I was making a joke about this, that the S&P is flat for the week, but the intraday volatility was insane this week. All right, have a great weekend, guys. I'll see you on Monday. Happy Mother's Day to all the mothers out there.